Everyone's looking at those daily active users number. We're still seeing growth from the fourth quarter, just not as robust as some had anticipated.
That's right, Scarlett, and that is what I'm looking at too. And if you look at the growth year over year for the quarter, fourth quarter we saw a 48% increase in that daily active user number. By my quick math, this is only 36% increase year over year from the first quarter of last year. You'll remember when this company listed 2 months ago, user growth was a big concern. Granted, it's not what management wants the street to focus on, but this is going to be the number that I bet is driving these shares down right now.
Alex, one of the big stories is the idea that Facebook just keeps copying every Snapchat product and doing quite well with those copies, it would seem. Is that potentially one of the headwinds for people adopting Snap? That
definitely is, and it's Facebook's Instagram property in particular, where they have copied the stories. They have brought a lot of those advertiser dollars in, which is the hope is that drives revenue. So when you do look back at late 2016, that's when Instagram introduced stories, and that's where we saw kind of a fall off in user growth for Snap. I will say management did point out to some issues with its Android Snapchat app, but we will see if those were alleviated into this quarter, because then you could probably pretty confidently point toward Instagram as the reason for some of this user growth issue.
Paul, I'm looking at the other headlines on Snap, and the first quarter includes $2 billion of stock-based compensation expense. We know that for a lot of the tech companies, this quarter marked the quarter in which they decided to go with GAAP earnings instead of these adjusted earnings. Snap is still a young company in terms of a publicly traded company, but put this into perspective for us. Why does this matter for a small company to look at the stock compensation?
Well, for a lot of these small startup tech companies, even for the larger, more established tech companies, they are cash light on compensation and very equity rich, particularly in stock options. And that's how the wealth is created for the employees throughout this sector. So it's very common. But this quarter, first quarter out of the box, is a tremendous disappointment for Snap investors. I mean, you expect at least when you take the risk of buying an IPO, you expect one, if not 2 or 3 quarters where they're going to do a good job for you relative to expectations. First quarter out of the box, they missed on everything. Users, revenue, cash flow. There's really not much to like in this number at all.
If you look at Google Trends, Instagram stories are more popular, and I know you've touched upon this already, but what can they do? Are they already starting to fight back? Because they're looking less popular than some of their competitors who, as Joe was saying, are replicating everything that they do. Are they already fighting back or making noises? And what can they say on this call to convince that they are?
They have started adding things like a search tool within Snap. So you see some of those things come in that look more like Instagram, where it's not just the disappearing pictures. But what I think that they're going to come out and try to convince Wall Street is, look, these user growth numbers are important, but you should be looking at our revenue per user. I'll be looking for engagement metrics, some things along those lines.
And I'm glad you bring that up. I'm looking at average revenue per user, 90 cents in the first quarter of 2017. They point out it's an increase of 181% over the same time a year ago, but it's a drop of 14% from the fourth quarter when ARPU was $1.05. For a company like Snap, do we look at the year-over-year move or the sequential move?
They are still young. I think the sequential move is important because, remember, this company's only been making meaningful revenue for a little over a year and a half now. So that sequential move is probably going to be very important when it comes to judging the company's continued growth.
Paul, you mentioned that this is the company's first quarter right off the bat, right off this IPO. Even during the IPO roadshow, there was all kinds of frustration about the lack of detail. People thought that it was pretty opaque. Now, obviously, investors get hit with this news about slowing growth. How much does this sort of damage right off the bat the sort of credibility of the company that after that roadshow, which was disappointing, this number was so disappointing?
Management's can take a big credibility hit here for these numbers. And again, it's the first quarter out of the box. And here's a company where, again, the insiders control all of the votes here in this. And so there's a super control aspect here where the public shareholders are getting, less, representation than they typically would in an average U.S. company. Now, investors are willing to take that risk for the expectation of great execution and great stock price performance, and they're not getting it here in this first quarter. So, this is going to be a very tough call for them because, they missed on every single metric that they put out there 3 months ago, or the street has out there for 3 months ago. And the question is going to be, as Alex mentioned, there are some competitors out there like Facebook with Instagram who have deeper pockets, greater resources, and so the question is, do they have some new products in the pipeline? to kind of fight back and drive the user.
I was going to say they raised more than $3 billion in that IPO, so they've got money to invest. They've just got to decide what.